Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 1st, 2018. As we start off the new trading month, let's take a look at some of the things that have been focused on recently. We'll keep this quick. Not a lot really new to report now on the broad markets. We'll look at do another update on oil, Bitcoin. And before we start out the video, just keep in mind today the Fed begins their two-day rate meeting, and tomorrow at 2 o'clock Eastern time, that's when they'll come out and announce the rate decision. So the markets tend to go into, usually, there's no guarantees, but they usually go into somewhat of a holding pattern in front of an FOMC announcement. So we'll have that tomorrow. Now the Apple's out of the way. That's probably the biggest thing this week, although we still have a slew of very heavy earnings calendar this week. A lot of the um, top components of the S&P 500, some big stocks reporting. So there's still some potential for some market movement, although most of the big ones are out of the way, including the 800-pound gorilla, biggest stock in the world, Apple. So what happened with Apple is they beat last night, and I mentioned, they were the most reasonably valued, the lowest priced as far as P ratios go, the best valued of all the big market leading FANG stocks. So you didn't really have the chance for a Facebook type sell off, even if they had missed. Like I said, the charts can go either way, and they did. They popped up. They're looking indicated about at 200 or so in the pre-market session. So what I did, I put a line up here around 200. This is a daily chart. This is as of yesterday's close. So this is what it's going to look like at the open, barring anything between now and then. It's a little before 9 o'clock as I do this video. So we're going to gap up here to around the $200 area. And what I did is I just lifted this divergence line up. So it doesn't mean we reverse there, but again, my point being that these divergences aren't anywhere even close to being taken out. That's the divergence line where it was yesterday. So I move it up here if we happen to reverse on or around the $200 area. And, as long as we stay above, I'm sorry, as long as the indicators stay below at least these recent peaks right here, we have divergence all the way back here from this point in, early November. But here's your previous reaction highs on the RSI and the PPO up above, and you have these other lines. So again, we can extend these lines. We can even extend that line all the way off the November highs, and that gives Apple plenty of room if it wants to kick on up, take out, maybe even move above the 200 level, and still keep those divergences intact. And again, those aren't sell signals; they're just an indication that a trend change is likely, momentum is waning, and so we'll keep an eye on Apple, see what it looks like. It'll have some obviously have an impact on the market, being the largest component of S&P 500 and by far the largest, still the largest component of the QQQ or NASDAQ 100. So again, let's just watch and see what happens. We'll take it from there. Now, on a related note, we look at technology. Let's look at XLK real quick. We have this pattern. We have this most recent divergent high. I can probably show you on a cleaner board. Here it is. This board looks a little easier. Divergent high 1, divergent high 2, divergent high 3. So here's how the tech sector looks. And most of us know tech has been underperforming for the first time in a long time recently as far as sectors go compared to the broad market. And these targets, I've had these here for a while. I'd actually move this up here. This would be if and when tech breaks, first target up here around 62. So just ignore the labeling on these, but there are levels um, that still look like I think they're going to be hit in 2018. And what you have here is a pretty well-defined uptrend line right here on XLK, the tech ETF. And the QQQ will look very similar because there's such an overlap on the components, but there it is. There's your move off the April lows. Takes this wedge type pattern. We had a divergent high correction, and just an extension of the divergent highs, just like Apple. Really, no different from that. And of course, Apple's in here. And then another chart to look at. Actually, before we move away from this one, just go back to two-day period chart. Let's look at this one right here. And this shows you, here's that trend line, comes all the way back off. Really there was a little mini crash in XLK and QQQ back here. That's that long spike back in 2015. But you can see this trend line normalizes around early 2016. Same trend line a lot of the indexes and broad markets have. And you can see we've been cracking below it And you also have divergences out here on this 2-day period chart. I just wanted to show you how long that longer term trend line is, and that's what we're cracking just below right now. We had a couple instances, I'm sorry, where we've dropped below it earlier this year, and that was due to that large volatility. Those big corrections that we had took us down below it. So this looks like a longer term uptrend line that's been cracking, and again, just focus on that short term trend line right here. That's probably the most significant. Now, member Francis Q in the trading room posted some nice analysis on including RTY, looking at some comparisons. And here's our RYT, which is the Equal Weight Tech ETF. I wasn't familiar with this one before, so I put up my own chart as well, and there it is. You can see similar to XLK. So this one's right on trend line support. It's a well-defined trend line, comes right there off the early February lows. Lots of reactions to help validate that trend line on the bottom, and you can see the negative divergence. Again, that's RYT. That's the Equal Weighted Tech ETF. So you apply an equal weighting to each of those components. So Apple and Google or Alphabet, they don't carry such a heavy weighting, and you get the same picture there. And so what I'm looking at was whether we have another reaction. We're at trendline support, and that's one thing to consider here with tech. Support is support until and unless broken. So you have these reactions. TA 101 says you either buy pullbacks to support, or if you think it's going to break, you wait for a breakdown to short. So right now, is it objective to go long? No, because you're at support. But if we do break that trend line, especially impulsively, I expect some support to come in here around 156.75. But to just try to quantify it, from where we're at today. I'm taking the measuring tool. If you see the pop-up box on the left, that's about a 9% drop, and that's where I think said and done. That would be a swing target for RYT if you want to trade the equal weighted ETF. Okay, let's just stick with the short term, the intraday charts on this video, since not a lot has changed yet on the big picture. I've covered those charts recently, the daily and weekly charts. So here's I'm sorry, this is NQ 60-minute charts. These are the NASDAQ 100 futures. This will kind of give us an indication what happened last night and everything else in trading. And this remains my what I call my bounce target zone, 3 levels. I've covered those levels in recent videos, and so you can see so far we've stopped at that bottom resistance level, the bottom end of that bounce target zone. Certainly the potential to have more, but we'll see. We'll see what happens here. We can probably draw a little minor uptrend line right here. I wouldn't put a super heavy weighting because it's not very long term, but there it is. We could probably tighten that up a little, something like that. So there's a level you might want to watch if you're an NQ trader and you zoom in down to a 5-15 minute chart and get a better idea of that. So there's what we're looking at. And I'll be honest with you, as of today, the previous video heading into yesterday, I told you I had a slightly upward bias in the market, bullish bias. And now today, I don't know, coin toss odds. I just think maybe keep it light right now. If you start to see this market roll over, we might get a chance to add, to engage it short again. And I can also say this, and I said it yesterday. Whether we hit the top, anything's possible. We could take out the top of my target zone, or we could reverse here at the bottom. But these are all objective levels to add. These are resistance levels. We had this big breakdown here. The daily charts are still a little work to be done, but these are all key levels. So those are levels where you can, let's say, scale in short. If you're looking to add back some short exposure, or you haven't been short and you'd like to, um, these are levels to scale in. So you add a little bit here at this first level, right there. If we go up here, you add a little bit more at that level. And if we continue on up here, you add a little bit more, and then you have your stop somewhere over here. Now, if you're a long side trader, what you want to see if you've bought the dips, if you went long, reversed it, that was my downside target zone right here. We hit that and reversed to the button. So if you're long and you want to continue to increase your long exposure, what you want to do now is wait to see a break above each of these levels. So although I had that line there, that first bottom of that target zone at 72.89, there's a little reaction high slightly above it. So as I put my cursor there, the crosshairs, that tells me it's about 7,300. So you wait for a break above 7,300, and then a break above this level so you can continue to add there. and just trail your stops up. If you bought here, you're in good shape. You have plenty of room to add and raise your stops to protect profits. But again, things could be a little choppy or even sideways between now and tomorrow afternoon when the Fed comes out. So, and then after a Fed announcement, there's usually some back and forth quick swings. Don't try to read too much into the initial knee-jerk reaction in the markets after an FOMC announcement, rate announcement. Just give it a little time, and then you'll have a good idea which way the market's probably going to break. Okay, ES, the S&P 500 E-minis, 60-minute chart as well. Here's the bigger picture. Here's what I'm looking at. We had the, break of this minor little trend line here, and then the more significant longer-term trend line off the late June lows right here. Now, the question is, a big question always, is this over? Is that the correction? Is that all we're going to get? We know that the S&P 500 has been relatively stronger than the Nasdaq 100. Tech has taken the Nasdaq 100 all the way back down to here. That was that key level I mentioned. We broke out there. So that's what the correction, they were mirroring each other for the most part. And of course, with a lot of big tech names going down, Facebook included, this is what the Qs did. We are NQ, Nasdaq 100, QQQ. We back tested that level and have reversed, whereas SPY hardly had, you could see, hardly retraced any of that move from the breakout right here all the way up to the highs. So where we're at, is it over? It's possible. We'll know soon enough, but let's do the same thing that we did with NQ. Let's have a little trend line right here. I'm going to give you my thoughts. I don't think the correction is over. I think if I look at the measured pattern, measured target, I take the widest part of this wedge right here. I'm talking about this uptrend line and this line here. There's your bearish rising wedge. I take that and I add that line, and I'm just doing a rough approximation to where the wedge broke down. That puts me somewhere here around this reaction low right there. So what I think is probably happening here is this was the initial leg down, first kickback rally. So even if we have a simple ABC corrective wave pattern there, that would take us down here. So I do think I'm leaning towards another move down. And whether it happens before or after the FOMC announcement, hard to say, but that's where I'm leaning. And obviously, if we took out this level that remains a support level there, 27.96, give or take, a little bit of reactions below it. You can go all the way down to about 27.90 on ES. It's a pretty important level. And remember, I talked about this one in recent videos as well. There was our previous high. When we tested it, failed, tried to take it out on two different attempts there on the 60-minute, finally took it out and successfully back tested it on numerous occasions. So this is a pretty significant level here. And again, if it's taken out, that would be my minimum target. And we could quite possibly, just like the NQ did and the Qs, come test that basing pattern right there that we had in late June, early July. So those are potential targets for you if you're swing trading ES or even the SPY. You can correlate these charts with SPY. And if you're watching this video and say, Randy, I don't have a futures account, I can't trade futures. I've put up a video. I can give you a link to that on the site. Investing.com has free real-time futures charts. Create an account there. Create a little watch list. I have a watch list over to the right. It's off the screen right now. And you can get futures on all the futures, commodities, the indexes, and then you can, of course, create your own charts, replicate those. This is the NASDAQ 100 futures, the NQs, and you can see that same move down to that basing pattern that I talked about there. There it is from the breakout. So that's where we reversed so far. And so same story. Is this is this one and done? Is the correction over, or do we have more to come? We'll see. We'll see. Oh, okay. Let me also give you targets in case we do, in case things all of a sudden reverse. I could certainly put a line there. Here, let me do it this way. Let me use the chart drawing tools and give you, here, pull these up, go to let's do a horizontal line and give you a horizontal line right about here. That comes in around, we'll call it right around 7,000. I have it at 69.95 right there. Here, color that line white, and there you can see. So that is a potential target right there for NQ. and you could probably roughly correlate these levels as well to a QQQ chart if you're a QQQ trader. So if this is what we're looking at, and a little kickback rally here, soon to be faded, that would be a natural target for the NQ. QQQ traders, again, maybe this correction is over. I could certainly make the case just based on the scope of these patterns for QQQ. The divergences, everything else I was looking at playing out. But I can also make the case right here, and I showed you this could be and especially if it happens today. Today would catch a lot of traders off guard with Apple, blowing it out and trading up in after hours yesterday and then pre-market again today. The Fed on deck tomorrow. Everything I said. Usually the market going in a holding pattern. So just be on the lookout. I'm not going to call this a preferred scenario or very likely scenario, but that could be the move down, that impulsive move down being a flagpole, this being a bear flag consolidation pattern or continuation pattern, and then a move down and hit that third target zone that I have had listed for QQQ. I said before that this second target zone area was my preferred swing target. I'm still open to the possibility of this one, but my convictions right now just aren't super high. So there's a potential target. That would take us all the way down to about 169.70, which is the bottom of that range back there from late June, early July, and with the potential also to come down here to about 166.85. There's a lot of reactions there. That's a pretty decent support. So there's some targets for you QQQ traders, SPY traders. Um, and again, I'm showing you downside targets. Like on the SPY, for example, there's not a lot of overhead resistance. We have that recent reaction high right there. Then you have the all-time high back in January. It's still to the left of this chart. It's not much above that. So there's not a lot of overhead resistance on SPY. So I can't give you a lot of price targets, really anything accurate. The best tool you have in these cases is use Fibonacci projections, things like that. But again, I'm leaning towards that downside scenario, and I can also give you, pretty solid downside targets. That's what I'm going to do here. So there are key levels to watch for SPY traders, and also keep in mind if you only trade QQQ or SPY or anything else, just stocks as a whole, even if they're individual stocks. Keep an eye on them, both the indexes. All ships are lifted in a rising tide. That's an expression in Wall Street, but it's not all ships, but most ships. In other words, when the market's going up, most stocks are going up. You can certainly zero down and focus more on a single sector like technology that might be falling when the market's going up or rising when the market's going down. But where I'm going is you want to keep an eye on the broad markets at all times when trading, even if you're not trading the broad markets for that reason. So this level right here, that 279.50-ish, again, that was same thing I just went over on ES, where we broke out. We had a previous reaction high. We finally broke out, back tested for a while, back tested again. So that's a pretty important level. If you fall back below that, no bueno for the bulls. We go down here. This is what it looks like. A, B, this is possible B wave up, and a C wave correction that could take us down to that second target zone. So you can see my targets listed here. When I have two support levels in close proximity, I refer to that as a target zone. So there's T2 zone, there's your numbers, T3 zone if things start to get pretty ugly, and if it gets very ugly, then you want to look down here. You have some reaction lows there around 268. So there's some downside targets, and get these out because you never know. Sometimes the market catches everybody off guard, and that way you can have these targets on your chart. Or, and again, if you're also a bull, these are pullback targets. These are support levels where you can go long, add to long exposure, or use these as targets to cover short positions. This is crude oil via CL, the crude futures. This chart has just been playing out perfectly. I've been able to make some great trades, and crude's a volatile little beast. I don't often put it up. Sometimes I'll use, and I don't put futures as official trade ideas on the site because I'm aware that a lot of traders and retail traders, investors do not have futures accounts. They don't have the ability to trade futures. So if I do, I typically will use, if I'm going to trade crude, the official proxies on the site will be something like USO or maybe one of the leveraged ETFs that go long or short crude oil. But with that being said, the analysis on crude and the way the technicals have played out have been just working so well. And we had this bearish rising wedge. It was pointed out. We had a breakdown. It was an impulsive move down. Started highlighting this divergent low here and the opportunity for a bounce trade. We got that. And then most recently, I stated at the time there, my bounce target would be these three lines here. And you can see just how well the technicals have worked. We went up, we hit that first target zone several times. Finally powered on through it, and you can see how many reactions off that second target zone. And then finally, my third and final, that was my uppermost bounce target, hit it to the button, and we had negative divergence at 70.43, and we've had a nice, healthy reversal. I mean, this is, just even a single contract of CLs, but that's several thousands of dollars right there in profit, just shorting the top of that range, just like especially going long. So again, the technicals are working well in CL right now, and where I see it going from here, well, let's take a look. Um, this is we had an uptrend line right here. Oh, that's not drawing out very well. Let's try it here. There we go. So we've broken this trend line now, and let's look at USO because I know a lot of you guys like to trade the ETNs. USO. All right, this is USO on a daily chart. I know I have a lot of lines here. It looks kind of busy, but the most significant line here is this primary uptrend line right there off the June lows back in 2017. Well-defined trend line. We had a little period where we broke down below it and then recovered it, and that's odd. However, there's so many reactions on that trend line. I left it there. I think it's still valid. So we had a divergent high. This divergent high was really right here. When I zoomed in on the chart, it kind of moves the annotations over, and then divergent high too. So when we pop back in and recover that trend line, we put in another divergent high, came back down, and we've been back testing. We broke down below that trend line again and have been back testing from below. So the way I would draw this now is I have another trend line right here. I actually posted a chart in the trading room this morning. There's a little uptrend line to watch. And though we have a potential bullish crossover on the PPO, it's potential. And those aren't be all end all buy and sell signals. Sometimes they get rejected. Sometimes you have a cross or what looks like a cross here, and then you get rejected, and then you don't cross, you cross later on. Sometimes you cross and you flatten out. So again, it's just something to point out. There is that potential. Looks like the momentum is turning up here with that PPO line curling up. But if we break down, and there's your trend line. It's pretty well defined. And it's that same, really, this trend line I just added here would be that same uptrend line I just drew before we exited that CL chart. So look for a breakdown there. I still remain intermediate term bearish on crude. And I think that the first counter trend bounce, I think this was the high right here, counter trend bounce number one. I think the next leg down is probably coming soon. USO traders, you can see some levels down here. I would tell you, here's what I favor, 1352 and then 1301. That 1301, we'll call it $13. Let's round that off. $13, that's a pretty key level. Lots of reactions there. Lots of reactions in the past. So there's a level to watch and a potential target. That'd be a good move down from 1428 down to 13 percentage-wise. That's a good move. Of course, that would have implications on the energy sector too. There's XLE looking, XLE struggled with this 78, 50-ish level and hasn't been able to take it out. So the big story is whether it does take it out, whether my analysis on crude is wrong or not. Crude punches up to new highs. If crude punches up to new highs, it's going to take the energy stocks with them, and they have the potential to break out above that level, make a sustained breakout. But as of now, we have this trading range. So the next big move in the energy stocks will probably come on a definitive upside or downside break of that range. That's XLE. And of course, I didn't even show you. I had zoomed in. You had a lot of attempts going all the way back there to 2016. This is just like a brick wall, or I should say a ceiling so far for XLE. Let's move on to Bitcoin and we'll wrap this up. Let's see. That's crude. Here's Bitcoin. All right, Bitcoin, story on Bitcoin. We had a breakout level about 7,000 right here. That's the 7,000 mark. We had a lot of reactions there. Bitcoin broke out. It was everything you want to see in a breakout, impulsive, rallied up, and then most recently I pointed out the rally was pretty extended, and I was pointing out these negative divergences right here with the RSI and the PPO making lower highs with the indexes making, or the Bitcoin. These are Bitcoin futures, GXBT, making higher highs. So there it is. We came down, we tested the trend line, and boom, breakdown, back test, all she wrote. So this one's also playing out well to the technicals. And yesterday I posted, somebody asked, I had two inquiries actually. There's three ways I trade Bitcoin. I either trade it through these futures, GXBT, or the proxies. And there's a lot out there, but I just focus on RIOT or Overstock. And so I'll get to those charts in a second. But my point was that this bearish rising wedge pattern has more than met its measured target. Look at the widest part of the wedge. We can see from where it broke down, we've certainly met that measured target. And yesterday, I believe it was, I posted this as being my pullback target zone, my support zone right here. So we had hit the top of it yesterday. Now we moved through and we hit the bottom, moved just a little bit below the bottom of that, but have since recovered it. If you want to know where those levels are, 75.40 is the bottom, 77,667 or so is the top of that range. So we're already at the bottom. And where I'm going with this, I think this will likely contain the pullback. If it doesn't, I should move that line up. Next support's all the way down here at about 72.96. So I'm favoring that this level holds and we get a resumption of the uptrend from here. And if so, I'm going to show you some potential trading ops with those two proxies I just mentioned. But there's also a downtrend line to watch. Obviously, that would be bullish if this downtrend line gets taken out, and if we can hold, especially these recent lows, and start to rally from here. If not, more downside to come. So the success or failure of these two, Overstock, well, was doing a great job of tracking until recently. Somebody mentioned the trading, something about they started a new venture, maybe into real estate or somewhere else, and you started to see Overstock correct. It broke out along with Bitcoin here. It had a nice rally, as did RIOT, but then Overstock started correcting before Bitcoin. And my analysis, when somebody asked my opinion on it the other day, it's in what I call no man's land, technical no man's land. And what that is, it's smack between support 3240 and resistance. This is a resistance zone right here, and it's right smack in the middle. So basically, I don't like to buy stocks that are in no man's land. The reason is, if I buy a pullback to support, great, I can put my stop just below. And if I short a stock, heading up into resistance, great, I can set my stop just above. It has no business, I give it a little room in case they try to run the stops. But when you buy in the middle, where are you going to put your stop? You can pick a random percentage term, but I like to quantify my entries and exits, and time them strategically. Go long at support with a stop below and everything like I just said. So there's Overstock, and not to spend too much time on it because right now this one's been doing a better job. So where we go with this trade idea, it's super aggressive. I've said that many times. This sucker moves. And you see yesterday it was down 15%. And that's not even, you can go back and look at, you see candles much larger than that. So if you are not used to trading a stock like this, and you usually trade with 5, 2, 3, 5, 4, 5, 6, 7, 8% stops, you'll be out in a day in this thing with one move against you. So you have to use very small position sizes. That allows for much larger stops, but you're being rewarded because the profit potential is a lot larger. So let's talk about that. So this one's pulled back to support here, 637. You can see that line has been there a long time. That's a key level for RIOT. It's contained all the pullbacks other than this brief period where it broke down below. Trades well to the technicals. These lines here, this is a bullish pennant. You had a flagpole, a sharp move up, um, consolidation period, and then this line is a duplicate of this line, and that's a measured target, and it played out perfectly. So this one tends to play out well to the technicals, as Bitcoin's been doing lately, and there it is. So the story is this one's pulled back to support, while Bitcoin is pulled back to where I think it will stop. I can't say that with a high degree of confidence because I don't see a lot in the charts to tell me to buy other than it's pulled back to support and that pattern has met its measured move. And especially the fact it just recently broke out. It had been consolidating for a while. So there it is. So you could take a shot at this one. I already mentioned your stops. You don't try a 1-2% stop. You're going to be stopped out before the trade even gets going, more than likely. But buy it somewhere around that 637 level with a stop somewhat below, and target I think if Bitcoin has another leg up, this thing can head all the way back up here to 960. Try to put in percentage terms. You're talking about a 47, almost a 50, yeah, no, right there. It's over 50%. So about a 50% gain. Therefore, you can allow for a 15% stop loss, and you're still getting just better than a 3-to-1 RR by, because 15% downside would give you a 3-to-1 RR if you were shooting for a 45% profit target. So therefore, it doesn't take a lot of money if you're going to get 50% return. Um, that's my thoughts on this one. So again, very aggressive trade, high risk, speculative, but passing along for those interested. We'll wrap it up here. Didn't really want to go too deep into trade ideas in this video. I do need to update those in another post, as well as commodities, which I keep saying I'm going to do a video on commodities. And you know what? I'll make a point to do that this morning. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed.